Hey bosses, thank you so much for checking out this video. If you can do me a favor, click the subscribe button underneath the video and also tap the bell next to it. That'll make sure you get access to all the Invest Like a Boss videos as soon as they are available. Hey bosses, let me tell you about our sponsor for this episode, Indeed.com. Indeed is the largest job site in the world. In fact, they're responsible for 4 times more hires than all the other leading job sites combined. So they know exactly how important it is to find you quality candidates and fast. In fact, they just got even faster. They have this new feature called Instant Match. Here's how it works. You post your job and instantly Indeed searches through millions of their resumes on file and finds you a short list of quality candidates instantly. If you want to take advantage of this new Instant Match feature and also get a $75 credit to boost your job post, it's easy. Just head to Indeed.com/iLab. That's Indeed.com/ILAB. You'll get a $75 credit to boost your job post, and it's their best offer anywhere. So check it out. Indeed.com/iLab. All right, let's continue this episode. He's our youngest guest ever on Invest Like a Boss, and it's because we are talking about teenage investing. So what better opportunity than to have an actual teenage investor on? His name's Jack Rosenthal. Thanks for joining Invest Like a Boss.
Thanks so much for having me on. Excited to be here.
Yeah, so you actually reached out to us, and I thought this would be a really good chance to talk to our bosses. And especially, I bet we have some bosses out there who have some kids that are, if they aren't teenagers yet, they're going to be very soon. And they want to get them started in investing and kind of give them some of that passion that, that they've found out through investing. And if they're listening to the show, I would assume they have that. So can you tell us about growing up and what age that you actually started to invest and what inspired you to get into this game?
Yeah, totally. So I got started investing when I was 8 years old. My grandfather set me up with a stock market portfolio. He basically gave me some money. He said, all right, Jack, here's some money. You can decide how you want to put it, what stocks you want to put in, how much you want to put in each stock. And ever since then, I've been an investor. There's actually a funny story. Those first amount of stocks that I invested in actually performed poorly when I was 8 years old. So I learned a lot of lessons from that. And basically the way my grandfather did it is he let me fail first and said, all right, I'm going to give you the money. You decide whatever you want to do with it. I made some decisions. I didn't fail that badly. I think we lost 4% that year, but it was definitely wasn't a win. And then he said, okay, now I'm going to teach you how I invest and what kind of metrics that I look for when investing. And I kind of followed his strategies and his teachings ever since. And he got me started, and then I learned from others online and through books.
So 8 years old, what were some of the stocks you're picking? I'm curious. Do you remember any of those initial ones?
Yeah. So I believe some of them were like some oil companies. The oil companies, actually, I remember those because they did well. And then there were some other smaller cap companies that didn't do as well. I was kind of playing in the smaller cap space, which was okay, but it didn't really have as much of the growth factor as a lot of the larger cap stocks. So the next year I invested a lot of larger cap stocks. And ever since then, that was like in 2012 or 13 or something like that. Ever since then, the large cap stocks have just been on a massive bull run. And I've really appreciated that.
Yeah, for sure. And you already got 10 years experience on your belt because I think you're 18 now, right?
Yep, 18 years old. Last year came out with my book, Teen Investing, after 9 years of investing. And I basically decided to write a book about investing and all about how other young people can get interested and get involved in investing just like I did at a young age.
That's really cool. And what better time to fail than, when you still got a roof over your head and you got a place to crash if you lose everything. So that's really awesome. You said I think you said your grandfather helped you start your first account, right? So parents, grandparents, whoever it may be, obviously they were supportive in this. Do you feel like they, that they pushed you into it, or it was kind of a mutual feeling? And, is there any advice that, parents that out there that have, kids that, maybe know nothing about money, like a way to get them interested in, investing?
Yeah, so no, I was not pushed to do it at all. So basically the way it worked is my grandfather gave me some money, and he also gave the same amount of money to my brother. And for my brother, he just invested all into the S&P 500 on my brother's behalf. My brother didn't even know he had an account. With me, either I can invest in the S&P 500 or you can decide what you want to do with it. I chose the path of deciding what I wanted to do with it. So it wasn't forced on me at all. I wanted to. But anyway, then I ended up not performing as well. I lost 4%. I think my brother's account gained 10%. So I was like very angry. And
It's
then
boring to follow the S&P, but it's worked out pretty well
but it
in the
worked out
last
pretty
10,
well for
20
the last
years.
7 years. So actually, since then, I've put a lot of money in the S&P 500, and that's done really well. So yeah, just that's what happened when I was 8.
Cool. Is there any advice that maybe you have out there for someone that has a teenager to maybe get them incentivized to get into the market? I mean, obviously the factor that you could make more money, but is there any other reason that you see that it's benefited your life to start so young?
Yeah, well, the biggest reason that's really benefited is they say like $1 now is worth like $8 or something like that when you're older because of all the interest and appreciation it can get.
Sure.
So every single dollar you invest in the stock market now is worth exponentially more in the future.
I would argue
It's
the point that if you're starting at your age, it's going to be worth a lot more than $8 as well. So
easily, yeah, especially depending on what markets you invest in. I mean, with cryptocurrency, who knows? It might be worth 100.
right, it could be $8 in next week.
Exactly. So yeah, that's the first thing as far as the money. And then the second thing is it's really good for teaching about investing later on in life. I saw a quote recently that said like, if you don't know how to manage $1,000 a month in income, you definitely won't know how to manage $10,000 a month in income. I think it's the same thing. If you don't know how to manage like, having income and then saving a portion of that income and investing it, or leaving the investment account and not touching the investments and taking it out the second you want to go buy something new and fancy, I think those kind of same money habits and money principles can apply much later on in life. And then I'd also say, like something like a part two to your question was like, well, what kind of resources can get kids interested in investing at an early age? I'd obviously like my book. I mean, the fact that that's written by another teenager, I think is actually really helpful. And I would honestly recommend the book, even if I didn't write it, just because it's one of the few books on teen investing written by another teenager. But also there's tons of YouTube videos on investing. Graham Stephan has a great channel with a lot of great videos about investing as a young person.
I've been
And
trying to book Graham on the show for months. He's a
Graham,
ghost.
Graham is a legend. Graham is a legend. That guy has really been able to accomplish something cool on YouTube. So Graham's a great channel to listen to. Meet Kevin. I'm sure you've heard of that guy. Also really cool, great content, really honest guy. I think what I really like about both those guys are really honest guys, and they're not like, they don't have any ulterior motives. They just want to help their audiences. So those are two great people you can listen to on YouTube. Another great book called The Intelligent Investor. Anyway, just some great resources for young people.
Great. So what really drove you to, I know you found some success investing and you really enjoy it, but what drove you to really share your story and inspire other teenagers into getting involved in it as well?
Yeah, so this kind of gets back to my story. And, when I was 8 years old, I started investing. But then when I was 14, I started something called the Young Investors Club, LLC. So that was a club that I built out where basically I wanted to invest money alongside other teenagers. So the way it worked is everybody was going to put in $1,000 in the stock market, and we were all going to manage the money collectively in the stock market. So that first year, I knew I had to find some kind of organization or something I could partner with in order to actually get the members. So contacted an organization after 6 months of going through decision makers and basically going up the corporate ladder of that corporation or that organization, which had a lot of parents in it. We finally got approved to be on their email list. So we'd send out blast emails promoting the club to their members as kind of like an additional service for members with kids. So that first year we had 20 members and $20,000 in the group's portfolio. That was freshman year of high school. By junior year of high school, when I was 16, we had 40 members and $40,000 in portfolio. And that year I was like, I have something cool here, but I want to take this to become the biggest and the largest teen investing club in the country. So I grew it from 40 members and 40,000 to close to 100 members and over $120,000 in the group's investment portfolio, making it the largest that I'm aware of teen investing club in the country.
Very cool. I was going to talk about this later, but let's jump into it now. So let's talk more about your club. I think you had said $1,000 minimum to start. Is it still $1,000 or does it work any differently today?
So today, I believe it's still, I think it's like 1,100, something like that. Some kind of weird number. I think I came up with that because I was like, hey, no one really seems to care about the extra $100. So might as well get the extra money to grow the portfolio even bigger. But yes, the way the club works today is I created the club when I was 14. when I was senior in high school, I left the club to go basically have another high schooler run the club. I always wanted a high schooler to be running the club. So as I was leaving for college, I wanted a teenager to still be running the club. So I grew the club from basically nothing to close to 100 members by the end of my senior year. Now it's run by another smart high schooler who I've said is like sometimes he's a better manager of the club than me because he's really good at the operations aspect. I was really good at recruiting, but he was really good at operations. Yeah, still like $1,100 to join. And basically, yeah, it's not like an expense. You get that kind of piece of the investment portfolio. So if it performs well, you can take your investment out. And we've seen a lot of teenagers do that where they started freshman year like me, and then by the time they're done with senior year, they take their money out and they've gained a few $100s plus their $1,000 investment.
So you said you left just recently because you're off to college, and others, it sounds like they have too. Is it mandatory that when you're no longer a teenager, you can't be in this club?
It's not mandatory, but a lot of people have just kind of followed that.
Sure. Where are your members based? Is everybody in the US or are you kind of worldwide? How does that break down?
Everybody is on the East Coast.
Okay.
So yes, we started just in New York. That was the original 20 members. Then we expanded up and down the East Coast, and that's how we got all the extra members.
Very cool. So how are decisions made on investments? Is it a popular vote system? Does someone make a case for a certain investment? Are there certain individuals that have maybe more of a say in what to invest in?
Yeah, so every single person who's on the call, so we have quarterly calls, and those are when we make decisions and reallocate the portfolio. Every single person who's on the call gets to decide, gets to have basically a vote, and then the majority wins. So if we say, okay, we're going to sell, who votes on selling, half our position here and investing in this other company or keeping it in cash, we'll vote on each decision. Majority rules.
Cool. So where are all the assets held, and how do distributions work when someone wants to cash out, or do you pay a dividend? Especially since almost every member is not legally an adult. Who is holding the assets in the club?
Yep. So the assets. So another smart thing. So when I started the club, we had to find a sponsor. I think before the larger platform let us go onto their platform and really promote the service to their members, we had to convince one of their members to sponsor the club.
Okay.
So remember, I sent out one member invitation, like asking a member to sponsor. He said no. And I think if I'd given up right there, it wouldn't have been possible. There's so many different elements when I started this club where if I'd given up like one step, it wouldn't have been possible.
Sure.
Anyway, then I got like the names of 4 other members, shot emails to all of them. 3 of them said no. One of them said maybe. And then I got on a phone call with him and he agreed to sponsor the club. He actually ran a financial services company, so that was perfect. So they gave us all the legal help we needed, all the accounting help we needed. They held the accounts in their name, and we used a Charles Schwab account. That was the trading account that we used. So everything was done through them. We used their conference room for these annual meetings we had. Very, very helpful.
Great. Yeah, I'm sure that's a big ask of someone to, have that big liability of taking on multiple minors' money. So, there's a lot of potential for things to go wrong there. So it sounds like you got a good source on that, though.
One thing I'll say, it was majority helping us more than it was helping them. But one way it's helping them is it was a good way for them to like promote this. It was kind of like marketing for them. Like they're saying, they're the sponsor of this thing called the Young Investors Club, which is like the largest teen investing club. And they kind of use that as a little bit of a branding thing. But yeah, the majority is it helped us.
Sure. Makes sense. Tell me about some of your biggest wins and biggest losses in the club. I mean, everything's not going to be a home run. So any that really stand out in the last few years?
The biggest win was a weed stock that we invested in. We doubled our money in 1 month, so that was the biggest.
I love that.
So that was funny. And then the biggest loss, I don't know, those are hard to remember. We didn't have that many huge losses just because a lot of the positions that even if we were losing, we would just wait. And then the whole markets have been on such a bull run that even like the
Sure.
worst performance just still kind of came back. So, but that was definitely our biggest win, that the weed stock.
Yeah, it kind of seems like the way this crazy market is, you can almost just throw darts and do pretty well. What kind of returns have you seen since the club has started?
I believe we produced around 10% per year annualized.
Great. With that, that's the Young Investors Club. We'll talk about how to get involved in that at the end of the show. Why don't we just talk about some very first steps for teenagers that want to get involved in investing? What would be the first thing that you would do? Let's say you have that $1,000, but you're not in this club, you're just out on your own. What would be the very first thing you would, a 14-year-old Jack would do?
Yeah, totally. So that's the exact advice I talk about in this book. I kind of made a 3-step plan that I think every teenager should follow. So first thing, you mentioned $1,000. $1,000 is too little to start with as a teenager. I've gotten. That's been a controversial statement that I said in the past, but I stand by it. I
Okay.
think that every single teenager should be able to bank $5,000. That's the amount you should get when you want to first start investing. Very attainable to do as a teenager. A lot of summer jobs, if you work at a summer job and you work $10 to $15 an hour job and you work a few hours a week, over one summer you can easily get $3,000 by the end of the summer. Not to mention if you work a few summers as a high schooler, so you can easily get that $5,000. Just whether you have the will to not spend the money that you instantly earn, plus gifts and everything, you can easily get the 5,000. So that's the first goal: get your first $5,000. Once you have that amount of money, then I'd say you can either go down two paths. You can either become an active investor or a passive investor. Active, choose a couple different stocks, watch those stocks very carefully, and try and beat the returns of the S&P 500, which, by the way, the majority of hedge fund managers can't even beat.
Hmm.
Or just take a passive approach, put all your $5,000 into the S&P 500, which is, you're not investing all in one thing. You're investing in 500 different companies. So one entity, but 500 diversification as far as 500 different stocks, and just leave your money there and just wait, because as long as you don't have to sell, or you don't need that money in the immediate future, that'll return 8 to 10% per year on average. It's returned that much for the last 50 years, and I expect it to return the same amount for the next 50 years.
So it sounds like most of your assets that you're suggesting are, at least as a teenager, are individual stocks or excuse me, an index fund. Is there any other assets that you've been involved in, or you would suggest as a teenager? Maybe a REIT? Do you want to jump in the crypto game?
I was gonna
Anything else that you'd suggest?
Yeah, I was gonna say crypto. That's the one that I actually think teenagers should be involved in. I had a mixed stance on this. Like previously, if you asked me this question 2 years ago, I'd say teenagers should not be involved in cryptocurrency. It's too volatile, too early of a market for them to really, for it to be stable and for it to be worth it. But now that crypto's kind of past this point, I think like once Bitcoin passed $50,000 a coin, I think the crypto markets really became a lot more mature. And once that institutional money started to pour in, and cities like Miami keep a certain percentage of their treasury in Bitcoin, that really gave me a lot more confidence in the crypto market. And all investing is just based on confidence. It's what degree of confidence the investors have in the asset. So yeah, I would say it does make sense now for teenagers to get involved in cryptocurrency. I personally have some cryptocurrency. I have some Ethereum, bought Ethereum.
You've been doing very well the last couple of days.
I've been doing very well the last couple of days. Very happy with that. Now I'm only mad I didn't put in more.
Same here.
But yes, I made investment in Ethereum. And I think that it makes sense for a teenager to take a portion of their investment portfolios and put it into some of the blue chip crypto stocks. I think the majority, like the altcoins and the smaller ones, I mean, those are just gambles. You can go to a casino and make the same kind of gamble. But I'd say like the safer blue chip stuff, Ethereum is really my favorite, is what I would invest in.
Sure. We've been kind of preaching on the show here not to put more than 5% of your portfolio into crypto. It is getting a little bit more stable and more confident in investing in that. So you can maybe creep that up a little bit. Is there a certain number that you like to diversify, as a younger person? Is there,
Yeah, I would say
what is your breakdown?
once again, it depends on how much money you have, because if you have $5,000, $1,000 is like 20%, but it's also
Mhm.
$1,000, and you're probably going to make much more than that when you get older. So I'd say anywhere between, for a teenager, like 5 to 10% is probably a good amount to have in crypto. The majority should be in the S&P 500, though, not in a bank account, because bank accounts get eaten away by inflation every single year. Having your money in the bank account is like the same thing to like having your money like Pablo Escobar did in the in the
Under
food.
the mattress and in the tunnel.
Yeah, exactly. Every single year they lost billions of dollars just because rats were eating away the money. And I'd say that's like the same thing with inflation. Keeping your money in the bank account is like the same thing as having rats eat 2% of your money every single year. So definitely make sure your money's invested in strong asset classes that are producing a return higher than inflation.
Awesome. So you had mentioned, get a summer job, find a gig, do whatever you got to do. That's a lot easier coming from someone like you to tell a teenager to do that. I think a lot of parents are probably telling their teenagers, go get a job. You need to get out of the house, stop playing video games. So I guess coming from you, what would you suggest are some kind of standout gigs that you've seen that, are accessible to a teenager that can really help you excel your earnings quicker?
Yeah. All right. So I'm trying to think of some jobs that friends of mine have had. Well, I mean, like the obvious one is like, go be a pool kid, a pool lifeguard at the local country club. I mean, that's like a fun job, I think.
Sure.
Uh, golf caddy. I've heard some of my friends have made a lot of money golf caddying over the summer. The rich golf guys pay big
Yep.
tips. Let's see. I mean, you can start a business. That one's a little more risky. You probably, for the majority of teenagers, you'll probably make more money off of a job than you will out of a business because a business takes money that you have to invest up front and you might not get that money back. It's a lot more risky. You can also get a lot more of a return. But with a job, at least, you're going to show up there. You're going to get paid $10 for every hour you work. In a business, you might get paid $0 for every hour you work, or you might lose money. Now, I personally have had some success in doing teenage entrepreneurship, and through my books and through other businesses that I'm involved in, I've made a fair amount of money. But I'd say the majority of teenagers, like there's local jobs that you can get. I would say internet businesses are really great for teenagers. There's so much of the internet economy now is actually run by teenagers because 50 years ago, if you wanted to open a commerce business, the only way to do that was with a brick and mortar store. But now through websites like Shopify and using Facebook ads, Google to drive traffic, teenagers are running these e-commerce shops and very successful e-commerce shops. And I know some of them that run $1 million companies that are just 18 or 19 years old, just all through the internet. So I think leveraging the internet to start a business is a great idea if you want to start a business, or just go work a local job and maybe try and save up enough money to start a business, take the money from working at the job to start a business, and then, launch a real business, which is where you can make a long-term amount of money.
Very cool. So this is a question that I'm curious about now. Way back in the day when I was in high school, they didn't teach us anything about money, and that's something that really frustrates me. The amount of people that are financially illiterate is shocking in this country, especially for someone, a country that's very wealthy. Most people don't even know how to keep a balance in their checking account without overdrafting every single month, and keep a budget, or get that credit card and drive it up and then just keep paying the bill, and that's part of the life. Was there anything when you were in school, because obviously you just got out of high school, were they teaching any of those things?
I think there was like a 1-day class about personal finance that was offered as an optional class.
One whole day?
One whole day. Yeah, sit in front of a screen for 8 hours, and good luck to anybody that remembers it a year later. And that was also optional, so like only maybe 20 kids would take it out of 200 in the grade. So there's not a ton of information. In college, it's the same way. I mean, even in colleges, you expect them to be a lot more up with the times, but they don't really teach a lot about financial education or personal savings.
At my college, they actually they had a bank sponsorship, so they would set up credit card booths in the entire center lawn and just sign up kids for 20% credit cards all day.
I mean, see, I'd say that's borderline taking advantage of college students.
I would agree.
They don't know any better. And I'd say although it kind of probably came more naturally to me, it just always seemed like, okay, why would I ever, borrow money from a credit card or paid off late when you have to pay more interest rate or something like that? But that's just because maybe it came more naturally or I was more aware of it. But I think teenagers that aren't really aware of it and they just think like, oh, it's like only 20% more or something like that. It won't really add up a lot. But then all of a sudden they have thousands of dollars in credit card debt, and then that's affecting their own credit. That could really have a big impact on your life. And maybe you can try to buy a house. If you have a really poor credit score, you might not be able to buy a home, which is obviously a really important thing to a lot of people. So I'd say definitely needs to be taught more in schools. I mean, I'd say that's like an obvious one. How it should be taught more in schools. I mean, it could be argued that finance is just as important as coding or definitely foreign languages or something like that. Like there's a lot of classes that are taught in school, which are much less relevant to the everyday American than finances. Finances will affect every single person. Foreign languages only 10% of people are actually going to need to use those, but finances, 100% of people need to know about finances. So there should definitely be some way to incorporate more in schools and especially colleges.
Totally agree with that. Hopefully that'll happen soon, or we can get some kind of programs in there, or maybe you can pitch them your book. I think that would be a good call too. Speaking of your book, it's called Teen Investing, The Ultimate Guide to Teenage Investing. Jack Rosenthal is our guest. Why don't you brag a little bit about your book? You said you had, you initially said your 3 steps to get started as an investor. What else can teens learn inside that book?
Yeah, let me look through the chapters now. Okay, so I go over some information. So first of all, I wrote 2 books, one Teen Investing and the other one Teen Entrepreneurship. Teen Investing is my flagship one all about investing, and it's been out for 2 years, like close to a year now, over a year now. And the other one I just wrote, Teen Entrepreneurship, which just came out last month, and that's all about becoming an entrepreneur as a teenager. But as
Right.
far as what I go over in this one, so I go over, I think, let's see, 15 plus a few bonus ones, different ways of how to go about making that first $5,000 as a teenager. Then I talk about some definitional basic stuff like what's the difference between stocks and bonds overall, preferred stock, index funds, what I personally look for when I'm investing. Then I do something really cool, a Yahoo Finance deep dive. So I like go into the Yahoo Finance portal, and like there's a bunch of numbers there, and most people don't have any idea what all those numbers mean, like the P ratio or PEG ratio, whatever it may be. I walk through each one of those and describe what it means, and most importantly, what I look for in that number. So what I want to see as a healthy P ratio, which I think is really helpful to investors.
Great.
So anyway, that's just some basic information that's in the book. Book did really well. Like I said, or maybe I didn't, but I put it up on Amazon in 2019, expecting just to get a few sales here and there. The original purpose of the book was I wanted to give it out for free to all the members of the Young Investors Club, just as like a goodbye present. Thanks everyone for joining the club. And, here's a list of all my investing principles that I've done over the years, and you passed on to, you or your little brother or little cousin or whatever. But anyway, then I listened to the book on Amazon, and it did really well. And since then, it's become the #2 best-selling book for teen investing on Amazon, which very proud of and very excited about. So anyway, yeah, everyone should go check out the book. Great book for if you have children or if you have cousins, nieces, nephews, anyone who's a teenager.
Very cool. And I think Amazon is the best place to go get it. We'll leave a link in the show notes on how to grab Jack's book. Maybe just a fun question before we get out of here. You've been very successful. You've done really well. You had to have bought something cool with some of that money. Did you spend something on some of the wins? What'd you get?
How'd you know? I bought a flame. I bought a flamethrower recently.
What? One of those Tesla crazy ones?
Very similar to the Elon Musk one.
Okay.
Very similar to that one. I bought a replica of the Elon Musk one. Because, although I'm willing to spend some, not willing to go crazy nuts. The Elon Musk ones originally sold for $500 retail. Now they go for $2,000. So I didn't want to pay 4 times the retail price, but I found another.
Well, you missed out on that investment, obviously.
I know. Damn it, I missed out on the flamethrower and the investment. But I bought this replica version of that for $400. So that's been my most recent splurge.
Cool. Do you got any pictures using it?
I could try and send you some after the show, but
you should definitely do that. We'll put that up on the show too. I think that might have to be your image for the show.
I love it.
So Jack, thank you so much for your time. This is really awesome. I think it's gonna be really valuable to our bosses, who have kids that are maybe interested in investing, or a way to get them interested in investing, to check out your book. And also the Young Investors Club. I think the website for that is younginvestorsclub.org. That's correct?
Yep, correct.
Great. So we'll put all those links in the show notes. Once again, his book is called Teen Investing, The Ultimate Guide to Teenage Investing. Jack, thank you so much for your time on Invest Like a Boss.
Thanks so much for having me on. Really glad we did this interview.